We have an easy alternative.
All right. Well, I'm started recording the meeting, and I will upload it to YouTube after when we are done.
Great.
I will go ahead and officially call this meeting of the Northern Kentucky Public Entity Joint Health Insurance Board meeting to order. First item of business is, Madam Secretary, do we have a quorum?
7, 8, 9. We have at least 9. I don't know who iPhone is that's connecting, but we have 9 members. So yes, we have a quorum.
Okay. Next item on the agenda is approval of the agenda.
So moved.
Right.
Second, Bill.
Bill, okay.
Any discussion or changes? If not, all in favor, please say aye.
Aye.
Are there any opposed? Okay. Hearing none, next item.
Who seconded that motion? Sorry.
It was the motion was made by Mayor Adams, seconded by Bill Osborne.
Okay.
Next item on the agenda is the approval of minutes of our last meeting. I'll entertain a motion.
I so move.
I'll second.
Oh.
Right. Any discussion or edits? If not, all in favor, please say aye.
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 Any opposed? Okay. Hearing none, approved. Next item on the agenda is the financial report.
Okay, I'm going to share my screen. Megan, can you allow me to share my screen?
I thought I changed that setting. Do you want me to pull it up?
Yeah, you can pull it up if you like.
Okay.
So it's we have 2 different financial reports actually. So if we can start with the one that's dated 6/30.
Yeah, this one.
No, that's a MedBen year-end summary. We'll touch on that also.
I can share my screen if you want me to share it.
Oh, there she goes.
Yep.
Okay, perfect. So let's see if you can scroll up. All right, so this is the year-end report for the fiscal year that ended in June. And looking at the blue bar toward the bottom of the page there, you had an attachment point of $4.5 million. So that was the maximum amount that under your stop loss contract you were required to pay before you got any money back under your aggregate policy. And you did not reach that amount, but you actually had $2.3 million in-network medical claims and $445,000 in quote-unquote out-of-network medical claims. But really what's included in that column now, in addition to true out-of-network claims that you have on your PPO plans, is any claims that are coming in under plans 9, 10, or 11 that are outside of direct contracts that you have with local hospital systems. So they're not really out-of-network in the sense that we usually think of out-of-network. And then you had about $930,000 in drug claims. Your fixed costs were $837,000. Your total plan costs were $4.48 million. And you did not have anything back from the stop loss carrier last year. and you collected about $4.73 million in premiums. So we ended the year to the good, about $252,000, which is really good. And then in the green box at the bottom left, you can see that you ran at about 76.6% of your attachment point, which is really great. We expect you to be 75 to 80%. And then also on the bottom right-hand side of the page, you'll see that you received about $46,000 in pharmacy rebates, and you paid out about $1,300 in PCORI fees. That's one of the ACA taxes. And if you can move down to slow, Megan. Okay, so looking at your prior year reserves, coming into the year, you had $460,000 or so in reserves. So when you add in the $251,519 plus your RX rebates and subtract the PCORI fees, you ended the year with a reserve of approximately $757,000, which is not bad at all. Any questions on that one? Okay, then Megan, if you wouldn't mind going to the other spreadsheet that's dated 7/31. There we go. Okay, so this is the new fiscal year. And for the month of July, your attachment point was 442,000. You had in-network medical claims of 86,000, out-of-network 158. Your drug claims were 106. Your fixed costs were about 74,000. So your total plan costs this month were 423,379. Nothing back from the stop loss carrier. You collected premiums of $457,000. So you're to the good about 34,000. Running at about 79% of your attachment point. If you could scroll down just a little. Okay, there you'll, on the left-hand side, you'll see your reserve coming into this year. And then if we add in the $34,000 for July and then a few RX rebates, you should be at about $795,000. Any questions? Okay, Megan, if you wouldn't mind, I'll let Brooke touch on the MedBand year-end report. This is the only MedBand report we're going to look at today.
Okay, is Brooke able, are you able to share your screen? Okay.
I thought I was, but it said host disabled participant screen sharing.
Oh, well, that's because I changed that after I started the meeting. So I think, is that something that was sent out in email?
Yeah.
It was a separate email, so you might not have it there.
Oh, right. No, yeah, we got it.
Yep, that's it. Okay, so this is just a 5-year look back of your plan dating back to plan year 15 and 16, and then fast forward to this past year, 2019 through 2020. You have an $85,000 specific deductible with $150,000 aggregating specific. You can see towards the top of the plan under aggregate plan paid amount, you ended the year right around $2.7 million in medical claims, $928,000 in pharmacy claims for a total of about $3.65 million. You didn't have any reimbursements, and that was about 1% below where you were last year. When we break that out on a per employee per year plan paid basis, you were about 2% above where you ended up in 18 and 19. If you look at your per employee per year plan paid amount, you're right around $10,455. Your large claims made up about 28% of your total. And when you add fixed cost into your claims, you're flat from where you were in 18 and 19. So on a per employee per year basis, with fixed cost added in, you're right around $12,662. Any questions?
I do have a question about the fixed cost for this upcoming year. Were the nursing fees able to be taken off for the, I guess, our monthly
So
per
well
employee?
living.
With a well living, yes. Yes.
Yep, we reduced your well living fee. I believe it was, don't hold me to this, but I think it was by $250.
$250. Okay. Thank you.
$2.50 that is per person. Is that right?
Yep. Per
Okay.
employee per month.
Thanks.
Anything else on that, on the point? I'm actually, when you look over the budget numbers, I'm actually well pleased to see that we're flat for all essential purposes compared to the prior year, and we made up some ground from the bad year we had before that on our reserves, and hopefully with the increase we took this year, we'll be able to quickly close that gap and get to where we need to be in regards to that, and I think we'll have a further discussion on the reserve amount here in a bit. But are there
Yes,
any
and
questions?
can I make one comment on that, Mr. Chairman? If you look at the MedBen monthly claims reports, I don't think we need to pull them up right now, but if you look at the last few months of 2019, 2020, you'll see a pretty significant drop in medical claims, and that's a phenomenon that we have seen across our block of business, and it's ironically related to the pandemic. Even though, you know, there are people who have COVID-19 and some people are experiencing large claims, most of our groups have seen an actual reduction in claims for the last several months of the plan year because people weren't going out and having elective procedures done. A lot of people have put off having elective things done. So we got a little bit of a windfall, compliments of the coronavirus, which has helped our reserve situation. And the other thing is we had kind of a rough start to the last fiscal year, and things did actually kind of settle down after the first couple months of the plan year. But anyhow, we'll take it.
So then my only concern after that would be, should we, since those were electives that were put off, and I assume they're continuing to be put off for the moment, at some point those are going to uncork in there, and most people are going to go and get those elective surgeries taken care of. So should we expect to see a big spike in claims maybe in next 6 to 9 months from now, or maybe a year from now?
Well, we just don't know. We've started to see things kind of tick back up again in the last month or two. The other thing that nobody really knows, actuaries are struggling with this when they're trying to project future plan costs, is because people are putting care off, and if they're not taking care of their chronic conditions, are we going to see worse health situations in the future? So it's kind of hard to know how all this is going to play out, but at least if we start to see people going back out and getting those elective procedures done, you've got a little money in the bank to help offset that additional cost.
Any other questions or comments on the finances? Okay, hearing none. Next item on the agenda is our agenda items, and the first one listed is review of pre-certification requirements.
Okay, Megan, can you pull up that one pager? So the reason that this is on the agenda is the appeals committee has been dealing with a few situations in recent months in which the subject of pre-cert has come up. And one of the appeals committee members suggested that it might be good just to have the board review what the current pre-cert requirements are and to look at whether or not we should add to that list or perhaps, you know, subtract from the list. So just to kind of set up the discussion, currently your plan doesn't have a pre-cert penalty. So if somebody doesn't have something pre-certified and they're required to, there's really no penalty associated with that. We do have clients who have penalties. Sometimes they have a big penalty. Sometimes it's a very nominal penalty. Most of the time, it's something along the lines if you're going to have a penalty of, you know, like $500 or something like that. Because what happens oftentimes is that when pre-cert should be done and it's not done, even though it is technically a member responsibility, they don't oftentimes know that they're supposed to be responsible for that, and they don't know that their physician hasn't taken care of that or the hospital hasn't taken care of it. And so it ends up being sort of an unfortunate situation when there's a large penalty associated with failure to pre-cert, because you know, even though your plan document says this is your responsibility, we all know that everybody just assumes that their doctor or the hospital is taking whatever measures they need to take to get the procedure certified. So anyhow, currently your plan requires pre-certification in 3 different situations. And the first 2 are very standard for most plans. So if for inpatient stays and outpatient surgery. And then you also require it for a 3rd procedure, and that's proton beam therapy. And I think that was added a few years ago as part of a series of amendments. And the reason that that was added is that that's very expensive therapy. And oftentimes when somebody needs to have proton beam therapy, they could just as easily have standard radiation treatment. And so we like to make sure that that's pre-certified so that the plan doesn't incur unnecessary cost. Okay, so any questions so far? Okay, so then there are a few other areas in which you could add pre-cert requirements. We do have some groups who require pre-cert for these things. So one would be durable medical equipment. Some DME is really expensive. The other things are the high cost imaging like PET scans. CT scans don't tend to be as expensive. MRIs certainly are expensive. We have some groups who require pre-certification of imaging, not many. And then the last one is chemotherapy. And some groups require pre-cert for chemotherapy because what you don't want to have happen is that somebody gets, you know, 2 or 3 treatments into a course of chemotherapy, and then we find out that that course of treatment is not considered to be medically necessary. So then you're really in a quandary. So those are the additional ones that you could add to your plan. There would be some additional cost from American Health Holdings for adding to the list of items that need to be pre-certed. And Abigail, can you remind me what the additional fee was?
Yes, it'd be 39 cents per employee per month for the DME and chemo, and then the scans, those 3 are lumped in a bucket together. Again, 39 cents per employee per month.
Okay. Okay, so I mean, the downside to adding additional services is that there's additional costs and also that there are additional hoops that your employees have to jump through. You know, on the positive side, you know, you're potentially, you know, having some expensive procedures that aren't medically necessary prevented before they happen. So, MedBen folks, do you want to add to what I've said? What are most of your groups doing? Are they just sticking with the standard?
Yeah, most of our groups have the 3 standard that you guys currently have. We do have some that have added these possible additional ones. Like Lisa said, it would be catching something before it happens. So maybe then it didn't get to the appeals committee on the back end. So that's why some groups look at adding these things.
So I'm not a voting member, but the DME, can we set like a threshold on that? Like if it's over a certain dollar amount, because certain things like breast pumps that are required under the Affordable Care Act, and like orthopedic boots that a lot of times you get at the orthopedic doctor when you go in for an injury. Those are DME, and I think that's kind of, those are things that are unnecessary to screen. Those are, they're $300 ish. And I mean, I would hate to take a kid into the orthopedic doctor and have them be like, well, we can't give you the boot right now because we have to pre-certify it.
Yeah, so you could do that, right, Abigail? You could have a threshold.
Yep.
Do you have any groups who have such a threshold?
I think we have one that maybe it's like 1,500 or something like that. But then you just always have to take into account, if you add that requirement, you're going to have that additional fee per employee per month.
39 cents?
Yep.
So I didn't think that, maybe I misunderstood. I didn't think that we were looking at this from the perspective of adding more pre-cert requirements. Having been, having walked through some of those cases recently, those appeals, it felt like that we were getting more appeals since January on the pre-certification issue than we had in the past. So I didn't think that we were, what's everybody's thought? Or were we as a group interested in adding more pre-certification requirements, or were we just taking a look at this to see what they currently are?
So I'm not sure if adding anything is gonna be to our advantage. In addition to the cost, it seems like it may muddy the waters just a little bit. I mean, through the appeals, I know each one wasn't the same, but as far as the pre-certification, I mean, one was just a blatant disregard on the provider's side of it, that they were just hoping for the appeals. And then that became a back and forth between the appeals doctors and the provider. I'm just not sure if we add these. I didn't see where someone had a scan and it just wasn't medically necessary. It was all part of like an umbrella procedure, whether it be inpatient or outpatient. So I mean, I'm not sure the one-off, say MRI, somebody's having problems with their knee, they end up having surgery. That surgery has to be pre-certified anyway, correct? So I would feel that would kind of be an umbrella under some of these scans. I don't know, maybe I don't know, am I looking at this the wrong way? Because these, again, if it's a PET scan or even a CT scan, if it's just a one-off, that's a relatively low cost. As far as and also on the part of, determining whether it's medically necessary or not, again, I've seen that's just a matter of opinion sometimes, and whether a paper's been published or, one doctor's up on certain procedures or not. So I'm not sure if that's going to help us out by adding these additional requirements.
Yeah, and we're certainly not recommending that you do so. We're just trying to give you a sense of what the possibilities are, just so you can look at your overall pre-cert.
Absolutely.
Program.
I think also just I know I've sent an email out almost after every appeal that I've seen, just to employees, just say, hey, just be aware that, just have a communication with your doctor, ask more than a couple of times, has this been pre-certified, and even call MedBin just to make sure that it has been. Because unfortunately, in at least one of the cases, and I'm sure more that are out there, that these providers, they get it through so many times, and they just assume that it's going to be approved, even if it's denied the first time, just through appeals. And then unfortunately, it lays in the lap of the patient, our members. And And then, then we have to make a decision whether we're going to pay it or not. And it just makes things more complicated.
Yeah, I mean, because if something's not medically necessary, it is excluded from coverage. So it's helpful if you know before the procedure's done, if it's considered to be medically necessary or not. The other thing that a lot of times employees get confused about, and providers as well, is that there are really two separate issues with the service. Not just is it medically necessary, but does your plan cover it? So sometimes people assume that because a procedure has been pre-certified that it's covered. So it could be such that a service is considered medically necessary, but your plan excludes it. So there are two separate things that that really need to be checked on in advance of a procedure. Is it, if it requires pre-cert, has that pre-certification taken place? And then is this a covered benefit? So MedBen is the company that determines whether or not something's a covered benefit, and American Health Holdings is the company that determines whether or not it's a procedure that's medically necessary.
So are the appeals that the committee is seeing, are they because members failed to do the pre-cert, or is it because of the ruling that it was not medically necessary?
Well, in the one case, we had, it appeared that there was a miscommunication. So the doctor's office was pushing, trying to put through, get the pre-certification, and it required additional documentation from American Health Holdings. So I believe that was a medically necessary question, but the communication didn't reach the employee that it hadn't been pre-certified. And so the employee went forward with the surgery because it was scheduled, and then afterwards received notification that it hadn't been pre-certified. I think, correct me where I went wrong on that story. And the second one, I think, was also kind of anchored with American Health Holdings. Is that right, committee members?
I think we've had two. We've had one where it went through the pre-certification and was deemed to be not medically necessary.
Okay.
But the provider, they kind of pushed it through. It landed on a weekend or something. The surgery was on a Monday, so it was a timing issue. And then by the time the patient got home, the letter was in their mailbox saying it was not deemed medically necessary. We've also had it, like Lisa had, she made, there's got to be a distinction between medically necessary and then actually being covered by our plan, because it was a bariatric surgery, and it was pre-certified as medically necessary, but our plan did not cover it. So in that case, it was linked. So my question would be, where's the safety net there? I mean, when the doctor's office calls in, like, does it get caught with one phone call, or does there have to be two that go out? I know if you're dealing with MedBen and American Health Holding, how does that work?
Abigail, can you speak to what happens when a provider calls in? I think there are two separate numbers on the card, are there not?
Yes, so there's a number for American Health Holdings to do the pre-cert and call
Sure.
on any status of that. But then once it's either certified or non-certified, a letter goes out, and in that letter, it would say medically necessary or it's not medically necessary. But it also has a blurb saying that this isn't confirmation of coverage, so that you need to check with your plan to see if your plan actually covers this service. So then that's when they would or should confirm with MedBen that the plan actually covers it.
So all of this onus is really on the medical provider. They could check with MedBen and American Health Holdings simultaneously. Is that right?
Yes, they can.
Okay.
Great discussion. Any other questions?
I think that should actually be the recommendation, that providers actually call both because of that possibility, and that could help avoid those types of appeal situations down the road.
Is there something we could do to streamline that? Or does it have to go to two numbers? Or again, I'm not sure. I mean, as far as the back end process of calling a number and then they automatically either be checking or notify the provider that, hey, you need to call this number in order to deem it, whether it be medically necessary or to confirm that it's a covered procedure.
Yeah, it's gonna still have to be the two, American Health Holdings and MedBen, because American Health Holdings doesn't confirm any kind of benefits. They're just strictly looking at the medical necessity of the procedure that the provider is trying to certify.
Okay.
Keep in mind, we're basically dealing with one-off situations when we're getting them at the appeal process. 3 cases in the last several months, which is a lot because we've gone 2 or 3 years only with 2 cases. So yeah, we've been hit really hard recently. But think of all of the procedures and all of the cases that are processed through, and all the claims, and most of them go through with no problem. And I think a lot of the providers know that they need to do both, and I think that a lot of them do both. I think what we're seeing is the situations where people either try to just blow past the system, like we did with the one that just ignored the notice that it was not pre-certified, or there's other ones where there are cases where it's really, really, really close whether or not a procedure is or is not medically necessary, or the procedure that they did was not considered medically necessary, and then we're getting those appeals, and those are close calls, but that's why we have American Health Holdings to look out after us for that. And I agree, we've had a lot of appeals recently, but I also want to keep it in context of all the other claims and cases that we've had over the last 5 years.
So surprisingly, when we were in the midst of reviewing one of our appeals, I got a phone call on a Friday afternoon from an employee, panicked because they received a call from their doctor's office that their procedure scheduled for Monday morning had not been pre-certified, and if they wanted to move forward, they'd be on the hook for $11,000. And so I talked her through what we had talked through at the appeals process level, and it just explained that she would be on the hook for that amount if she went in on Monday. And she backed off, and it took, I think, another week for everything to come through properly. So I feel like things have changed a little bit. I feel like something has changed since January, because that one didn't go to the appeals process because I talked her through it. But I thought something has changed, which is perfectly fine. I think we do need to do an education piece, a flyer at least, with maybe our employees explaining the process, because they're the ones who get dinged in the end. You know what I mean?
Yeah, so if somebody has a procedure and they don't get pre-cert prior to the procedure, as long as it is a procedure that ultimately is considered to be medically necessary, then that would still be covered, correct, Abigail? It's just the risk that if the pre-cert's not done in advance, and ultimately when it's done, the procedure is deemed to be not medically necessary, that member could be on the hook conceivably for the cost of that procedure. Did I say that correctly, Abigail?
Yes.
Okay. But I do think that we could probably put together an educational piece for employees if MedBen doesn't already have something like that on hand, that explains that, this is your responsibility. Most of the time providers take care of it for you, but if you're having a procedure done, and we list the procedures, make sure that they've done that in advance, so that you make sure that A, that procedure is considered to be medically necessary, and B, that it's a covered service, so that you don't risk having to foot the bill for a very expensive procedure.
The other question I would have, and Abigail, maybe you know the answer to this, is obviously there can be missing information and this can affect the timing. But what is the average turnaround time between the time American Health Holdings is notified requesting authorization for a procedure and it being approved?
Typically, I think if they get everything, it's roughly, I think, 48 to 72 hours, but there's always the off chance that the provider doesn't send in the information and then they have to go back and forth. Or if a peer-to-peer is needed, that can take a little longer because they have to work with the provider to schedule that time. When are they available? So those ones can take a little longer. But I mean, if everything's sent in, they're typically pretty quick for the turnaround time.
And that average time hasn't gone up or down? It's been consistent?
Mm-hmm.
Any other comments? Next item is reserve recommendation and strategy.
Okay, I think I'd like to start with the reserve recommendation sheet, just to kind of review that. We've looked at that back when we were doing the budget. Okay, so what we do with reserve recommendations is we have a range, and it goes from what we would consider to be a minimal reserve up to what we would consider to be an optimal reserve. And the minimal reserve is basically just having enough claims on hand to pay run out claims if you would need to leave self-funding and go your separate ways and be fully insured or something like that. So based on your claims from last year, and I think down at the bottom, I can't remember how many months of claims we were looking at there, but it was about 1.5 months of claims. Run out has gotten a little faster than it used to be. We used to say 3 months of claims would be enough to run out a self-funded plan, but now it's a little faster. So based on that level of claims volume, it was about $512,500. So currently you're above that minimal reserve recommendation. And then the second level would be what we would consider to be an adequate level of reserve. And so for that, we take both the minimal reserve and then we add enough to offset having 3 people hit your specific deductible, and then plus paying out your entire aggregating specific. And so if you add all that up, it's about $405,000. So to have an adequate reserve, we would consider about $917,500 to be where you should be. Okay, and then beyond that, to have enough reserve on hand, not only to offset a few high claimants and to pay any run out claims, but also to just offset any poor renewal years. So if your plan's just running badly in general, it's not just that you've had a few high claimants, but your entire plan is running pretty hot, then we would allow another 3 months of claims for that, and that would be about $1,025,000. So adding that to the other amounts, we get to about $1.94 million. So that would be, kind of the best case scenario for a reserve. Okay, so now if you wouldn't mind moving to the reserve strategy page. Any questions on that while we're pulling up the other document? Okay, so Cheryl Moore was asked to come up with a proposed reserve strategy. So this is what we're proposing, and you all tell us whether you like this or not. But when the reserve would be below the minimum, then when you're setting the budget, we would propose that you add an additional amount to get you to that minimal reserve over the course of that next fiscal year. Okay, and then if your reserve is over the minimal amount, but not to the adequate amount, then we would recommend that you budget what your projected costs are going to be, plus an extra percentage that would get you to the adequate level over a 2 to 3 year period. And then if your reserve is at the adequate point, but not to the optimal point, then we would recommend that you budget your projected costs plus an extra percentage that would get you to the optimal level over a 5 to 10 year period. And then finally, if your reserve is at the optimal level, then of course you need to budget your projected cost. But if you want to use some of your reserve to offset the next year's cost, then you could do that. So you could reduce your budget by any amount of reserves over your optimal reserve amount. And we have had some clients who have been in the position of doing that. And that's a good year when you're able to do that. So just to give you an example, this is just an example of how these different scenarios might play out. So looking at your projected revenue for next year based on where we set all the rates, we're at about 5.1 million. And then to be a minimal reserve, as we saw in the last document, it'd be $512,500. So if you were below that, which you currently are not, you're above that, then we would have recommended that you budget the 5.1 million plus another 2.2% to get you back to the minimal reserve amount. So that's how that would have played out in our budget recommendation. And then if your reserve is between minimal and adequate, then you need to make up that $405,000. And so that would be adding an additional 4% if you wanted to get to the adequate reserve level over a 2 year period. If you want to spread it out over 3 years, then it would take you 2.6% more in premiums. And then on the next scenario, if you're at the adequate level but not to the optimal level of reserve, then there's a differential of $1,025,000. If you want to spread that out over 5 years, you would look at adding another 4% to your budget. If you want to spread it out over 10 years, then it would be an additional 2%. And then is there another, is that it? Okay, so if you're at the reserve, at the optimal level of reserve, then you don't need to add any additional amount, and you could conceivably reduce your budget by any amount of excess reserve you have. So what do you think?
So Lisa, when you say the projected cost, like what's the starting percentage that we would have if these are in addition to? So what would
I don't know, because it would depend on how your plan ran in any particular year and where we project your costs to be the following year. So that would be your base increase, taking you from current expenses to projected expenses. And then on top of that, you'd have the, let's say the 2.2%.
Lisa, I really like this. The only thing that seems a little odd is that if you're below the minimum, it would seem you would want to do more than the 2.2, possibly 2.2 plus 2.6 so that you're moving faster. Is that what you intended?
Well, I mean, that would really be up to the board. I mean, we would always like you to make sure that you have that minimal reserve on hand. We're always happy for you to do more. But
So if we would have had this in place this year, we would have agreed to the 12% and then added this. Is that correct?
no, so the 12%, so what we did this year is you budgeted more than your projected cost to get you to, a better reserve situation.
Mm-hmm.
But it wasn't, done on a predetermined percentage basis. We looked at just a couple different scenarios. I think 12%, maybe what was it, 9, 10, and 12 or something like that. And I can't remember exactly how much of that percentage was just to cover projected costs, but it was something less than that. So you built in an additional amount to get you to a better reserve position. I don't know if it was 2.2% or not, but some percentage.
And then would this be across the board increase for all premiums? So if, let's say, we take part in the wellness and the spousal carve out and those discounted, supposed to be discounted percentages, would it then wherever each entity would fall into, then this would be in addition to that amount? Or
yeah, I mean, that's how we've always done it in the past. We've all had the same increase. I think maybe one year we had a different increase for the reference-based plans versus the PPO, maybe several years ago, but basically we just apply the same percentage to every premium. And so if you're doing the spousal carve out and the wellness, you're starting at a lower number, but you get the same increase percentage wise.
So for this year, for this past year, when we were having this discussion, you were saying, and I can't remember it, so I'm just going to rely on what we were just talking about. Like it was a 9, an 11, or a 12. Like I feel like at one point we were saying it could be up to 15%.
Yeah, I think that's right.
Was that 9%? I mean, just from what we all can remember, was that at or maybe a little bit more than projected cost? Would that have just kept us afloat? And then we could have gone up from there to make sure that we're contributing to the reserve?
My recollection was the 9% was medical inflation. That was just what we needed to do if we repeated our claims and to stay even.
Okay. So for this year, we tacked on an additional 3% towards reserve, essentially. Okay.
Does it make
I think
sense
this is a
that we
great
approve
strategy.
this plan as sort of our strategic plan toward building our reserve?
Did you repeat that? I'm sorry, I didn't hear it.
I say, does it make sense that the board give their approval of this as our plan to build our reserve?
I think so.
Again, I want to go back to, if we are below the minimum, then it would seem that the percentage increase would need to be more in that situation than when you're operating at above adequate certainly. That 2.2% is the only number that bothers me if we drop below the minimum amount.
Where would you like to see that be?
I would say you would add your at least the 2.6% that is getting you toward the adequate reserve for a total of 4.8%. Again, if you're below the minimum.
For just the 1 year?
For the 1 year.
I I think you have to keep in mind that this is an example that's based off of $400,000 in the bank, and that the actual percentage increases would be based off of the actual number we had in the bank versus the claims that we had that year. And all of those percentages could differ based on whatever that situation was in the year we were facing that problem, simply because we may be closer, we may be farther away, and how many years we want to take to get there.
I agree completely that that's going to change. But the underlying concept behind this is, hey, we want to get toward at least adequate reserve. So if we're below minimum, we need to do more than just get us to the minimum. That's my point.
So Bill, what you're saying is kind of just get rid of that first one and kind of roll both of them together.
That might, yeah, you know what? That's a good suggestion, Lisa. I think, yes. We don't really need to be looking at that situation of just getting to minimum reserve.
So my question would be, if we're going to go systematically, just increased amounts dependent upon what we have in reserve, which I like the strategy. I just kind of like to know a little bit more how we're going to get to the projected cost. Because again, taking this year as an example, I know that we increased because, you know, we want to build that reserve, and it's showing in the numbers. But if we had that 12% and now we're going to increase by 4%, again, we were debating, you know, some of the budgets, they're small and some are very large. So a 4% increase on top of 12, or potentially we could have voted for 15 this year. So that would be a 19% increase. So just knowing what that projected, that bottom number, and how we're going to systematically go about that, whether it be, you know, obviously we're going to have fixed cost on top of medical inflation, and then on top of whatever else, or if those are the two factors, medical inflation as well as fixed cost, and then we add this on top of that in order for us to meet our goal. Or you know, as far as that goes, what's the strategy for coming up with that bottom number?
Yeah, Paul, I think you just nailed it. I think our baseline number is medical inflation with fixed costs, and then from there we just take and decide based on where we are and how fast we want to get there, how much additional we take to get to where we want to be.
Okay.
Yeah, and that's how we work your budget up every year. And we do also look at your high claimant situation to see, you know, do you have ongoing high claimants that are going to be a factor next year? That's kind of the other piece of the equation.
Okay.
Great discussion. Does anybody else have any other additional comments? I can't see everybody on the screen when the doc's up, so I'm not sure if anybody else is trying to get in.
Oh, it's a gallery.
Okay, if there's no additional questions, comments, or concerns regarding the strategy, I think Bill's suggestion that we have formally adopted is the correct one. I'll entertain those motions.
I move we adopt the plan as presented with the change that we eliminate the first tier situation when we're below the minimum.
Is there a second?
I second.
Motion made and seconded. Is there any other discussion? If not, all in favor, please say aye.
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 Are there anyone, is anyone opposed? Okay. Motion carries. Next item on the agenda is SANE contract update.
Okay, so by now you probably have all gotten your official letter from SANE informing you that your direct contract with them is being terminated effective December 31st. And we told everybody in an email, but just wanted to reiterate that you will indeed have a direct contract with SANE, but it will go through Employer Advisory Services, which is our contracting company, Cheryl Morgan's contracting arm. And Saini wanted to minimize the number of direct contracts that they were managing, and so they're kind of streamlining the process by having one agreement with EAS that you'll be signing a sub-agreement for. And then the other update, which was not in the email, is that Saini has agreed to continue their current terms for this upcoming year. So we're going to be getting the same rate on physician services and hospital services that we're getting currently. So we're really happy about that. And that's pretty much it. Does anybody have any questions on that?
So Lisa, is that agreement for the calendar year, or would that be for our fiscal year or for our plan year?
Yeah, it'll be a calendar year. And there is that $1 fee. I wanted to point that out, that Saini is getting sort of like an access fee that you pay to, like on your PPO plans, you pay that to MMO. And MedBen will take care of collecting that and remitting it, just like they do other access fees.
And does the new contract directly with Saini offers a little better discounting than what they're currently seeing? Is that accurate?
Well, it's better discount than what they're giving other providers. So what they've told us is that it's actually 20 points better than what they're giving Anthem. So that's huge.
But it's the same for us. I mean,
Yeah, same for you. Yes.
Right.
That's preferential to what they're giving carriers in the market.
So we must have worked out well for them if they're going to extend it to everybody.
Yeah, and just, I think I might have mentioned this at the last meeting, but in case I didn't, Saini also wrote off a big claim that came to the appeals committee. It was the situation that we discussed earlier where the provider in the hospital didn't get pre-cert before they performed the surgery. So they've been a good partner. And yeah, if you ever see Mr. Bill Banks, make sure and thank him for their partnership with the pool.
Okay. If there's no other questions about the Saini contract, next item I have is announcements and reminders. So I do want to announce, I know I haven't sent out the email yet to the appeals committee members, but we do have another appeal that came through. And unfortunately, this time, Margaret is not going to be able to be on the panel. So I do need to find another person who's willing to step in and help us hear the case. Because right now it's me, Mayor Adams, Mayor Zimbrot, and Paul would be hearing the case, and we'd like to have a fifth odd number, so that if for some reason the board splits, which we haven't so far, but if we did, we would be able to make a ruling. Is there someone willing to volunteer for that? If not, I'll choose.
It's a lot of fun. Everybody should be stepping up on that one.
It's very fun. It is.
Some good discussions, that's for sure.
It really is. And it shouldn't take too long. Our discussion usually takes about an hour and a half, depending on how many outstanding questions we have.
And are we going to be, since everybody's still in Zoom mode, are we going to do that one Zoom again like we've done the last couple? That worked out really well.
Yeah. I don't see any reason for the appeals committee to meet other than by Zoom.
Well, I was hoping someone else would volunteer, but since I'm not hearing any, I'll step in for this one time for Margaret.
Thank you.
Hey, Bill, just so you know, it does pay well.
I'm sure it does.
Same as everything. Okay. So I will send out an email trying to get everybody's availability for sometime next week, and then we'll just go ahead and do our thing with that.
Perfect.
Right. That's all I have, other than we would have to figure out when our next meeting is.
We set a meeting schedule for the year, did we not?
We did.
Yeah, let me pull it up.
While she's looking at that, can I ask that we put that strategic plan with modification in our minutes so that we'll have that, put it back on a year from now?
You can find it, yeah.
The next meeting's on October 16th.
Hey, Craig, did you want to get approval for that insurance invoice from Crawford?
Sure. We have annual invoices that we receive that's written into the budget for our board insurances. Megan, you have to remind me how much it is.
Let me pull that up right now.
But generally speaking, we typically go ahead and just pay those when those bills come in.
It's the crime policy. It's $2,332, which I think is lower than prior years.
Yeah. Does anybody object to us just taking the money out of the account to pay that bill? Because I'm the one that usually has to go to the bank and get the cashier's check. Okay, I'll take that as approval. Right. Anything else for the good of the order?
Just have a quick question about the co-pays. Has everything been sorted out with the co-pays for this plan year? I know initially there was a little confusion as far as the chiropractic care. I just want to make sure that kind of everything's been addressed and taken care of.
Abigail?
Yes, everything has been updated.
Okay, thank you.
Mhm.
Anything else? I think we're going to do a record speed, a speed record here. Yeah. All right. Okay, if there's nothing else, I entertain a motion to adjourn.
So moved.
Second.
All right. Okay, all in favor say aye.
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 See you all on October 16th.
Thank you.
Weekend.
Take
Thanks,
care.
everybody.
Hi, everybody.